The only way this country is going to grow into a 5-10 trillion economy over the next 5 to 10 years is if the financial sector grows at a similar pace. I was born in Mumbai, and both my parents were academics. While most people went to the beach for family holidays, I ended up accompanying my parents to various places in rural India on many of their development projects. I was then fortunate enough to get 2 full scholarships. I then worked both in the US as well as in India for a bunch of years as a consultant at McKinsey, and finally decided it was time to get my hands dirty. It was at this point that Gaurav and I first became friends. So we were both classmates at Stanford. We happened to discover that we had a shared passion for building something meaningful and long-term in India. And so we decided to actually zoom into this idea on access to credit and how we could enable access to credit at scale. As we looked sector by sector, we found a common theme, which was that credit penetration in India was chronically low. The rural parts were very well served through microfinance. The top end, both corporates as well as high-income salaried professionals, were very well served. But this missing middle of self-employed professionals, SMEs, individuals, households, this was where there was a huge gap. But at the same time, if you look at every business, whether it's an e-commerce business, whether it's a payments business, everyone is betting on this missing middle growing over the next 10 years, right? How are they going to grow? What has AI and tech done to lending in the last 5 years? It has crashed the cost of distribution. It has allowed us to underwrite in an automated fashion using data. And it has allowed us to design customer experiences and products for customers at a far better level of ease of use than ever before. On the demand side, I think technology has been a game changer. Today, we are able to, without a single branch, serve customers in over 12,000 pin codes over the length and breadth of the country. I think that level of reach is something that we have never seen before in financial services and credit in the country. Tech is democratizing access to credit wherever you live in India. Because things like Aadhaar, UPI, eNACH, right, account aggregator have dramatically brought down the cost of originating a small ticket loan. But equally, something like embedded finance has also reduced the cost of distribution by allowing lenders to be present at places where customers and merchants actually interact and transact. The vast majority of lending capital in India is still concentrated in a handful of banks. I think we are now starting to see that unlock through co-lending. Just to give you a sense, we do about 6 million loans a month today, majority of which are co-lent within seconds. It is possible. But what it requires is a huge amount of investment in technology platforms, middlewares, APIs that enable a bank and an NBFC in our case to work together seamlessly. But once it works, the effects are almost magical. And so I think as we see the supply side of this equation truly getting solved through technology, that's when we'll see dramatic increase in financial inclusion in the country.